Hi friends, it's Saturday the 22nd of February, is that right? Yeah, that's right. And we're going to be taking a look at Bitcoin in just a second. But before we dive on into the charts, I just wanted to say thank you so much to all 50 subscribers. That's wonderful. You're all Rocky Outcrop ticians. You're the original OG 50 subscribers. That's fantastic. Let's keep our eye out for 100. Thank you so much for joining in on the community. That's absolutely wonderful. Let's keep that rolling. Thank you so much. So let's just dive straight on into the chart, shall we? So here we are in the 4-hour chart. This is Bitcoin versus US dollar, 240 minutes. That's 4 hours Bitstamp, of course. And what we're looking at right now is to see whether or not the prices are able to use this as support here in this yellowy line here that we've got going across this horizontally here. And you can see that previously it was support, then broke down, became sort of resistance, and has acted as support. So that's the current support line that we're looking at really just now to see if we can maintain above there. If we can't maintain above there, then possibly we're coming back down to this 9,500 level or so, in which case you might even start to look at whether or not we'd get another low, and that would continue this downward trend that we've had since around about the 13th of February on this 4-hour chart here. So that's kind of where we're looking at really, more or less. And you can see I've got Fibonacci that I drew in here just to provide a little bit more clarity on top of the information we kind of already knew, and it was wick to wick. So I'll just move it over to body so you can see this sort of dynamic that we've got at play here. Again, now you can see that the upside target were for this 236 here. To make this a valid Fibonacci in the body to body, we need to break above and live up above that 9,750 or so level. And I suppose if you've been watching the charts over the last few days, you probably recognize that feeling, or have a feeling of that making sense in a way. We kind of know that you can kind of feel that that's where we would be. There's a few other things, of course, coming in around there, such as then the 382 on the other Fibonacci that I've just put back to the way it was before, the wick to wick one. Sorry, there we go. They're around about the same level, and of course the 21 moving average here in around that same area as well. And if we look to the oscillators, we can see that we had some bullish divergence between these lows here, so we're hoping for this to play out and give us some upside here and let us break above a couple of bits of support and resistance so historically, so that we can start to trend towards the upside again. If not, then I'd be a little bit more worried. Don't want to see any more downside coming in here. A few days ago we pointed out that this could have been some sort of head and shoulders type thing evolving onto the charts. If this were to come up and not come up as high when the price was coming down here, we said, oh, if it comes up here and doesn't come up as high, then maybe it'll look like a head and shoulders. And yeah, it looks like a head and shoulders, I suppose, with a sort of doubly head on it, on the thing there. There's to be a shoulder here, the head here, shoulder here, and well, I suppose if we were to come up here and be resisted by this neckline once again here, and then come on down, then you could be looking at a measured move off of this thing. Although I don't like using these on such a small time frame, but a measured move off of this of around about 10,500 down to say 10,000 or 9,700. That's a $700 measured move, and don't really need to draw that in there. I can just kind of guess. Say it came from here all the way down, you'll be looking towards the 9,000 level where we've got these other horizontals, and of course if that were to happen, then you'd be breaking past these two horizontal green lines here, which you see, which are both 382 Fibonacci retracements on really big term Fibonacci retracements that drew in from the all-time highs to the low down in the previous bear market cycle, and of course in this last year June to December cycle as well. So we really don't want to see that happening overall. Want that to kind of just fade away into nothing. In terms of the weekly, of course, is the weekend, and just wrap up here talking about the weekly and the CME charts. You'll hear the music in the background, but still be a wee bit of time left in the video as ever. But there we go. We really want to see the weekly ending above this area here of 9,500, of course, above the previous tops of this on this weekly chart. I don't know, whatever. And that's really kind of where we're looking for on the spot prices over the week, and of course over the weekend, and of course anything in and around. Well, suppose we'll go over to the I'll go to the daily real quick, and then go to the CME charts. But we can see that we're looking in these areas here for the potential for gaps as well in the CME chart. CMEs ended without having had so much of activity on Friday, which means if the prices were above on spot 9,750, then you could potentially get a gap, which would be to the downside at that point, just like how this one was to the upside here. And pardon me, Pardon me, so sorry about that. If the prices were to be 9,500 or so, then you'd have a gap to the downside, and that ties in with what we were saying before. So there's a Bitcoin update for today. Kind of works for the weekend as well, really. Hope you enjoyed it. I'm going to be doing a Ethereum, Chainlink, and Tezos one next. So like and subscribe if you want to see any extra content like that, of course. And I do these videos every day, so thank you very much for joining me. And what a great day it is, 50 subscribers. Thank you so much. Let's just see how that turns out. Probably have 49 whenever you tune in to watch this, because someone will hate what I've said. See you in the next one.